Welcome to this money management video on YouTube. Managing your money may be a difficult undertaking in today's fast-paced society. With so many financial tools, savings accounts, and investment alternatives accessible, it's simple to get confused and overwhelmed. Wealth management can help with it. Beyond investment, wealth management is a holistic method of handling your money. It entails creating a tailored financial strategy that considers your specific objectives, level of risk tolerance, and time horizon. A wealth manager may provide advice on how to increase and safeguard your wealth as well as assist you in making well-informed financial choices. The basics of wealth management, such as investing strategies, risk management, tax preparation, and retirement planning, will be covered in this video. We'll also go through some of the errors that individuals often make. Whether you're just beginning to accumulate money or you're searching for strategies to protect and expand what you currently have, this video will provide insightful advice and useful pointers to support your financial objectives. So relax, take some paper and a pen, become a channel subscriber, and let's explore the world of wealth management together. The term wealth management refers to the professional service that assists individuals, families, and businesses in managing their wealth in an all-encompassing and efficient manner. Wealth management can also refer to the practice of managing one's own personal wealth. In most cases, wealth management entails a variety of services, such as investment management, financial planning, tax planning, estate planning, risk management, and other services that are related to wealth management. The objective of wealth management is to assist customers in the long-term expansion and protection of their money, in addition to catering to the client's various financial and personal objectives. Wealth managers collaborate extensively with their customers to get an understanding of their individual requirements and to devise individualized investment plans that are in line with the client's intended monetary outcomes. Banks, investment companies, and independent financial advisors are the most common institutions that provide services in the field of wealth management. These experts often have considerable knowledge and expertise in a variety of areas of finance, and as a result, they are able to give customers with helpful counsel and direction that will assist them in achieving their financial goals. What exactly does wealth management entail? Wealth management refers to a kind of investment advising service that integrates several other financial services in order to better meet the requirements of wealthy customers. The advisor first gathers information about the client's desires and individual position via the use of a consultative method. Then, the advisor tailors a customized plan that makes use of a variety of financial products and services. Within the realm of wealth management, using a comprehensive approach is common practice. A comprehensive variety of services, including investment advice, estate planning, accounting services, retirement planning, and tax preparation services, may be supplied to a client in order to fulfill the complicated requirements of that client. While the cost structures of comprehensive wealth management services might vary, in most cases, fees are calculated depending on the amount of a client's assets that are managed, AUM. Acquiring knowledge on the management of wealth. Providing investing advice is just one aspect of wealth management. It is possible for it to include all aspects of a person's financial life. An integrated strategy, as opposed to one in which high net worth people try to combine the numerous pieces of advice and goods offered by a number of different specialists, may prove to be more beneficial to these individuals. Using this approach, a wealth manager will not only create a strategic plan for their clients' present and future requirements, but they will also coordinate the necessary services required to manage their clients' assets. These services may include will and trust services as well as business succession plans. Some wealth managers prefer to specialize in certain sectors, such as cross-border wealth management, although the majority of wealth managers are able to provide their services in any facet of the financial industry. This might be due to the special competence of the wealth manager in question, or it could be attributable to the major emphasis of the company in which the wealth manager is employed. In certain circumstances, a wealth management advisor may be required to coordinate the input of external financial experts with that of the client's own service professionals, such as an attorney or accountant, for example, in order to devise the most effective strategy possible for the client's benefit. Some wealth managers specialize in banking services while others provide guidance on charitable organizations. Illustration of the management of wealth. In general, wealth management offices are staffed with a group of consultants that are knowledgeable and experienced in a variety of sectors and are accessible to give advice. Consider the case of a customer who just lost a business partner but has $2 million in investable assets, in addition to a trust for their grandkids. This client also has a trust for their grandchildren. A wealth management agency would not only invest these monies in a discretionary account, but would also offer the necessary will and trust services for the purpose of minimizing inheritance taxes and preparing for the future. Wealth management advisors who are directly employed by investment firms may have more expertise in the field of investment strategy. On the other hand, wealth management advisors who are employed by large banks may place more of an emphasis on the management of trusts and available credit options, as well as overall estate planning or insurance options. In a nutshell, the level of competence may vary from company to company. Structures of businesses dealing with wealth management. Wealth managers may find employment with either a smaller company or a bigger corporation that is often connected to the financial sector. They may also operate independently. It is possible for wealth managers to operate under a variety of titles, including financial consultant or financial advisor, depending on the company in which they are employed. A customer may have access to members of a particular wealth management team or may get services from a single designated wealth manager. Costs associated with having a wealth manager. There are a few different pricing structures that advisors can utilize for their services. Some only accept payment in the form of a fee, whether it be on an hourly, yearly, or flat rate basis. Some work on commission and are compensated via the investments that they sell. Others are paid directly by their employers. Fee-based advisors make their money via a mix of the fee they charge their clients and commissions earned on the financial products they offer. According to the findings of a recent poll of financial advisors, the median advice fee for accounts up to $1 million in AUM is just around 1%. However, there are some advisors who charge higher fees, particularly for accounts with lower balances. Individuals who have larger balances typically pay a significantly lower median AUM fee, as this fee decreases as the individual's assets grow larger. Certifications for financial advisors and wealth managers. It is important that you investigate the qualifications of a professional in order to determine which designation and training could be most appropriate for your requirements and circumstances. The titles of Certified Financial Planner, Chartered Financial Analyst, and Personal Financial Specialist are considered to be the most prestigious professional advisor certifications. You may check a member's status with a professional certifying organization on their website to see whether they are in good standing, if they have been disciplined, or if they have received complaints. There is a resource available from the Financial Industry Regulatory Authority, FINRA, that outlines professional certifications. You may also check to see whether the organization that providing the credentials needs ongoing education, if it accepts complaints, and if it provides a mechanism for you to verify who currently has the credentials. 5 tactics that are used by wealth managers. The first thing a wealth manager does for a client is formulate a strategy that takes into account the customer's current financial condition, their long-term objectives, and their level of comfort with taking risks. It is important to make sure that all aspects of a client's financial picture, such as tax planning and wills and estates, are coordinated with one another in order to safeguard the client's fortune. It's possible that this will coincide with your financial estimates and plans for retirement. When the first plan has been formed, the manager will schedule periodic meetings with the clients to discuss updating objectives, reviewing the financial portfolio, and rebalancing it. At the same time, they may evaluate if the client needs further services, with the end objective being to continue serving the client throughout their whole lifetime. If you're interested in learning more about wealth management, we encourage you to do your own research, seek the advice of a professional, and take the necessary steps to start managing your money today. Thank you for watching, and we'll see you in the next video.